Hey everybody, back again with another video. It's video number 8. We're going to talk about trading rules and risk management. This one is probably one of the most important because half the battle in becoming a disciplined trader is reducing your losses so that your wins can have meaning. I'm going to go ahead and get started here. Let's go ahead and flip to our slides. We're going to talk about trading rules and some risk management. Okay, I'm going to follow the slides so we can stay on time here. Okay, now 7 rules, and the orange line there, they're baked into the strategies. Don't do it differently. You can, but if you do, you're not doing what you're saying you were going to do, which is become a disciplined trader. The first thing is, if there's no signal, no trade. Don't just go in there shooting from the hip, making choices and then saying, hey, this disciplined stuff doesn't work. No, it works. It's helped me. Okay. Now, the next thing is, once you do have a signal, wait for the confirmation candle. Wait for that next candle that proves that it's doing what you said it was going to do, or what you believe it's going to do, or what the strategy said it's going to do. Wait for the confirmation candle. Nobody can stop, for somebody says, hey, the war is over and, it's going to adjust the market, or some crazy news pops out, that those type of things you're not going to be able to control. Just wait for the signal and wait for the confirmation. Then you're able to consider yourself following a discipline. 1 trade per signal per day. Now, there's a strategy called dollar cost averaging, and you don't want to do that. Don't If you buy something at $100, it drops down to $50. Okay, if you buy another one, you paid an average of $75 instead of buying one from $100 and losing. But what you're doing is your dollar cost averaging. What you're doing is, each time it drops, if you really believe it's going up, you buy another one. That's digging a hole, and that's how you blow up your account. You won't last very long doing that. It makes sense to do it if something was going to cost me, if it was good at $100, it should be just as good at $75. That's the logic behind it. But once you make your trade and your trade goes against you, throw it away. It doesn't owe you anything. You don't owe it anything. It's just a trade. The next trade is coming. Forget that. Okay, let it go and move on. Overnight holds. Don't hold trades overnight, because remember, I tell you, we're doing options. So in options, there's theta decay. It's the longer something has more value. There's intrinsic and extrinsic value, and don't worry about all that. Just know that if something has 6 months until it expires versus 6 hours until it expires, the 6-month one is going to cost you more because it's got more time for it to go the way that you want it to. Now, the bottom line is, don't hold things overnight, because that loss over time on options is working against you. Open a trade during the day, win or lose, close it that day. That's the discipline. You can do what you want, but that's the discipline. Okay. Buy the ask and limit order only. Now, there's a order that you can do a limit order, or you can do a market order. The best way I could describe a market order is, if you went to the gas station and just said, okay, give me 10 gallons of gas, charge me whatever you think is fair. That's a market order. No, you look at the little dial and you say, okay, how much is it per gallon? And you expect to pay what you've been told it's going to cost. Market order is just the broker will fill it at the best value that he can. There's no guarantee that he's not going to buy it for a little bit more money, because if a stock or something is moving up really fast and you say, give me a market order, he may not be able to fill it until it practically finishes the move. It finishes the move and then it turns down and you're going, well, why did I pay that much? No, you want timeout. You want limit orders, okay? Limit orders. Say it again, limit orders. Okay, when you buy with a limit order, you know exactly what you're paying for it. And if your order doesn't fill, wait for the next trade. Okay. Buy at the ask and okay, there's the ask and the bid and the ask. Now, the way bid and ask works is, okay, you're gonna have, let's say you have, I almost need to draw this out for you, but we'll just go over it here. The bid and the ask. If you went to buy a car, okay, and you said, okay, I like that truck, I'm gonna buy it. You walked in and the salesman said, this truck is $100,000. You ready to buy it? You say, man, I wouldn't give you over 80,000 for that truck. Now those are expensive prices. I know trucks cost a lot of money now, but just go with me. All right. Man, I'm not giving you more than 80,000 for that truck. Okay. He has asked for $100,000. That's the ask. You have bid 80,000. That's the bid. Okay. The real value is someplace in the middle. It's probably around 95. The way that the bid and the ask work is the more people that are in there bidding for this car or trying to buy that particular truck, the next person will say, well, I'll give you 82 for it. And he'll say, well, I'll come down to 98, and they move down until they reach a consensus, and it's probably somewhere in the middle. Okay. Now, your buying at the ask means that you're buying really at the lowest level that somebody is willing to sell it to you for. So you're buying it for 100,000. You're getting in at that point. You're not buying it at 120,000. Okay, you're buying it at 100,000. So you're going to do a limit order, and you're going to. I usually buy at the ask. That way, I can get in pretty quickly. Okay, there's a way, and I'll show you on in Thinkorswim, where you can say, okay, my ask is that you sell this truck to me for, 92,000. And you can sit there and wait until all of the negotiation goes on, the price goes up and down, until your order gets filled at that limit price. Okay. So bottom line, what you want is a limit order. Okay. You're buying at the ask and you're selling at the bid. That's why when you jump into a trade, it immediately goes against you, because you can't sell it for exactly what you bought it for. That's why the spread is important. That's why I do SPY, because the spread is usually just a penny or two. It's I don't care if it drops down a penny when I paid, it doesn't matter. Bottom line, you want something that doesn't have a large gap between the bid and the ask. Okay, you want that truck to be that you want to buy. If the actual value is 90,000, you want him to be asking 92 and you want to be saying 89, and somewhere in there you can make a deal. Okay. That's the example there for bid and ask. Now, Bollinger, follow the direction. If the bias for the day is up only buy calls. If the bias for the day is down, only buy puts. Now, I'm only doing long. I don't do anything short. Well, short is completely a different other side of the market. We can talk about that later. We're doing long. What we're doing is buying calls and puts. Okay. Now, the see honor the FND the conflict warning. Yeah, if the banner is amber, I'm looking down here at the last item on this screen. Uh, just reduce your size. If you're normally doing 2 contracts or 3 contracts, if it's amber, just drop it down to 1 contract. You can still trade. Just if you don't have the all of the gates in your favor and you want to trade, just reduce what you're doing. That way you can kind of help control your losses. Now, here, let's take a look at the next slide here. These are your realistic trading expectation. It's a skill, not a shortcut. This is not the way to just get rich quick. What you're actually doing is you're trying to get a discipline, you're trying to manage your risk. You gotta have patience in order. You gotta wait for the setup. Don't just jump in there because you can. Just because you can doesn't mean it's the right thing to do. Okay. Once you find a process that works, just repeat it. Repeat it. Do it over and over again, and then increase the size of what you're doing. If you were doing 1 contract and you find yourself being successful at that, go to 2 contracts. Be successful at that. Go to 3 contracts. Don't try to hold it for longer periods of time. Okay. Consistency. Small wins beats occasional home runs. You'll get home runs every now and then, but don't make that the expectation. The expectation should be that you follow the discipline and you just make consistent wins, and then you increase what you're doing in order to make it better. Now, be cautious of AI expensive search. Now, you'll have people that'll tell you, and I'm not knocking them. Maybe it'll work, but be conscious of what you're doing. If somebody says, "Okay, give me $20, I'm going to give it to AI, and you're going to make $1 million by the end of the month." I, if it doesn't sound right, it's probably going to be tough to do. I'm not saying it can't happen. I'm just saying that if it doesn't sound like, I mean, everybody would be doing that. If I could throw $20, I'd give them $100. Okay, make me a millionaire 5 times over. No, stop. Copy trading without understanding the strategy. Okay, when you're listening to different people's strategies, make sure that you understand what they're doing. That way you can make your own decisions about that strategy. If you don't know what the strategy is doing at all, you're guessing. You might as well just, come on out to Vegas and just bet it, throw it on black on the roulette wheel and see if you can double your money. You're gambling, you're not trading. Okay. And the next thing is prop firm challenges with no edge behind them. Prop firms are something that we'll talk about in the future. They do have a real purpose out there, but some of them are not necessarily as good as others or have your best interests at heart. There's no heart in this. This is money. All they're doing is a lot of people are trying to make money, but prop firms, I'm not against them. What prop firms do is they will give you money to trade, but you have to be successful. You pay them a monthly fee, and then they will give you money to trade. You're trading their money and you're sharing in the wins with that. But if you're not consistent, if you're not consistently winning, they just keep your money and you start to, drop down and, you lose your, look up prop firms before you go into them. They do have a positive purpose and a positive role, but you have to use them in a way that's reliable. Okay. Now, when you're learning this, one other thing is that you can learn is you can do, especially on like Schwab or Thinkorswim. In Thinkorswim, you can get when you get an account, they give you a paper money account. Now, a paper money account is play money. You're working with the real market and the real numbers and stuff, and you're trading against that, and you're getting, but it's play money. It's not real money. You'll have they'll put like 100,000 in play money in there, and then you can make trades. That's good for learning how to trade, but again, take it with the grain of salt, because when you're trading with uh play money, you'll do things that you normally wouldn't do. Like if you say, okay, well, let's put a trade on for 10,000. Come on. When you're trading with real money, you have real expectations and you do real things with it. You have real worry and real anxiety and things like that. I understand that. Play money is for learning how to use the platforms. Okay. It's not for, don't use it as something that means anything towards your actual trading. Okay. Now, all of the studies that I put on down here, this last point on this slide for this video is make sure that the strategies that you use are all back tested. I will tell you that any strategy that I get from any affiliate that I put into day trade, it's going to have a minimum of a 55 to 60% win rate. If it doesn't, if the strategy is just 50-50, that's gambling. It's not, it's going to have a positive win rate, because what I'm going to do is anyone that sends in a strategy before I put it into the application, I'm going to back test it. Back test means I take the data for the last 30, 60 days, whatever, and I take their strategy and say, what would happen had I done this with this strategy all the way through for the last 30 days? Now, if I can't get an acceptable win rate from that, I won't put it in the application. So, is what it is. Okay. Alrighty. Now let's go ahead and take a look at what's going to be the next video. The next video is going to be getting started. Okay. Ready to start trading? Okay, the next video is going to be the one where we start that process. Okay. Alrighty. Good talking to you. Like and subscribe. Tell the other affiliates or the other day traders and folks about the video series so that they can put their strategies within the application, and then we can all keep everything in one place and share information on what works and what doesn't. All right. Okay. Take it easy. Have a good one. Peace.